This example alone for manufacturing accounts. 2023 yellow paper question number 46. They ask prime cost per unit. They ask total manufacturing cost and total non-manufacturing overheads. Right, given total cost is given and manufacturing overhead, total manufacturing overhead also given, and total variable cost is equal 60% of total cost. Think total cost is given based on that value 60%, and prime cost consists only variable cost. As given variable overhead per units, it is include production variable overheads, non-production variable overhead also, and given the variable manufacturing overhead per unit also given, and given from the beginning production quantity also. Those information given activity level 25,000 units. Right. First one given total cost. Think total cost can be divided by two parts. Production cost as well as non-production cost. Yes, given total cost is given 75 million. Total cost is given 75 million. Therefore, it should be divided by two parts. Total cost, total variable cost, and total fixed cost. This is the total cost. Think total cost can be divided by two parts, total variable cost and total fixed cost. It is given 60%, the total variable cost equals 60% of total cost. Therefore, based on this value, 60% should be calculated. 60% equal total variable cost. Therefore, think 7,500 into 60% equal 4,500,000. This is the total variable cost. And total fixed cost can be calculated. This one minus this one, total fixed cost. Therefore, the total fixed cost equal rupees 300,000. 3 million. Total cost can be divided by two parts, total variable cost and total fixed cost. Then it is given prime cost consists only variable cost. Prime cost consists only variable cost. And given the variable overhead per unit is given, variable overheads. Therefore, this one can be divided further two parts. Prime cost as well as variable overheads. Think prime cost is given, total variable overhead equal per units 70, production quantity also given 25,000. Therefore, total variable overhead can be calculated. Total variable overheads per unit is given 70. Therefore, 70 into 25,000. 25,000 is quantity. Therefore, 70 into 25,000. Therefore, 1,750,000. This is the total variable overheads. From this value deduct this one, prime cost can be calculated. Therefore, 4.5 million minus 1,750,000. Therefore, this is the total prime cost. Prime cost equal 2,750,000. Total prime cost. Then requirement one they ask prime cost per units. Requirement first one they ask prime cost per units. Therefore, this one divided by quantity. Prime cost per unit can be calculated. Right. This is the total prime cost. And they ask total manufacturing cost also. Think manufacturing cost included production, fixed production overheads as well as variable production overheads. And given total manufacturing overhead also given. Total manufacturing overhead is given. Right. And given variable manufacturing overheads per units. Variable manufacturing overhead per unit also given. Therefore, this is a variable overheads total value. Therefore, this one can be divided by two parts. This one can be divided by two parts. Variable production overhead as well as variable non-production overheads. It is given variable production overhead per unit is given 40. Therefore, variable production overhead per unit equal 40 into 25,000 can be calculated total variable production overheads. Therefore, 40 into 25,000. Therefore, this is the total variable production overheads 1 million. Right, total variable overhead equal 1,750,000. But this is a variable production overheads. Therefore, this one minus this one, balance part variable non-production overheads equals 750,000. Therefore, this is a variable non-production overheads. It has given variable overhead per unit is given into quantity. Total variable cost can be calculated. Total variable overheads. Total variable overhead can be divided by two parts: variable production overheads and variable non-production overheads. Variable production overhead per unit is given into quantity. Total variable production overhead can be calculated. Therefore, this is the variable non-production overheads, total value. Right, fixed cost also given. Think total fixed cost. Total fixed cost is given. Right, they ask first one prime cost per units. Therefore, prime cost per unit can be calculated. Total prime cost divided by quantity. Part A answer. Think first one they ask prime cost per units. Think total prime cost equal 2,750,000. Production quantity equal 25,000. Therefore, this is the first one answer. And 2,550,000 divided by, then 2,750,000 divided by 25,000. Therefore, this is the rupees 110. Part A answer. Part B they ask. Part B, total manufacturing cost. Think manufacturing cost included prime cost as well as production overheads. Think prime cost equal 2,750,000 prime cost and production overhead is given. Therefore, prime cost equal 2,750,000 plus total manufacturing overhead is given. Total manufacturing overhead 2,500,000, 2.5 million. Therefore, this is the total production cost. Therefore, total production cost equal rupees 5,250,000. Therefore, this is the total production cost. And part C they ask. Part C, total non-manufacturing overheads. Think total non-manufacturing overheads. Right. Total production overhead is given 2.5 million. Total production overheads. Think variable production overhead equal 1 million. Therefore, total production overheads. The fixed cost also can be divided by two parts. This one divided by two parts. Total production. Think non-production as well as production. It is given total manufacturing overhead 2.5 million. Therefore, it is include variable production overhead as well as fixed production overheads. Therefore, fixed production overheads. Total production overhead equal to 2.5 million minus 1 million. Therefore, this is the fixed production overheads. Fixed production overhead equal 1.5 million. How to calculate? Total production overhead equal 2.5 million and variable production overhead equal 1 million. Therefore, fixed production overhead equal 1.5 million. Balance part, fixed non-production overheads. Fixed non-production overhead also equal 1.5 million. Balance part. Then this is the fixed overheads, fixed production overheads and fixed non-production overheads. Therefore, part C they ask total non-production overheads. Think total non-production overhead available, variable non-production overhead, this value as is this value. This is the fixed non-production overheads and this is the variable non-production overheads. Production overhead, non-production. There's non-production. Non-production also can be divided by two parts. Fixed non-production overheads as well as variable non-production overheads. Therefore, part C answer, there's total non-manufacturing overheads. Think fixed non-manufacturing overhead equal 1.5 million as well as variable non-production overhead equal 750,000. Therefore, total value equal rupees 2,250,000. Think there are three requirements. This is a 2023 year old paper. Question number 46. Relevant for manufacturing accounts. Think total cost can be divided by two parts. Total variable cost and total fixed cost. Variable cost also can be divided by two parts. Prime cost and overhead, variable overheads. Variable overhead can be divided further two parts. Variable production overheads and variable non-production overheads. And fixed cost also can be divided by two parts. Fixed production overheads and fixed non-production overheads. Total production overhead is given. Total production overhead equal 2.5 million and variable production overhead equal 1 million. Therefore, fixed production overhead can be calculated. Then balance part, fixed non-production overheads. The non-production overhead also can be divided by two parts. Fixed non-production overheads as well as variable non-production overheads. Therefore, think question number 1, 2, part A, part B and part C. Part A there is prime cost. Prime cost per unit equal 110. And part B, total manufacturing cost 5,250,000 as well as total non-manufacturing overheads 2,250,000.